Welcome back to another episode of That Backyard Property Pod. You're here again for another mini episode. Today, we are tackling self-employed. So anyone that runs their own business and is ready or wanting to get a home loan. Or you might already have a home loan and you're wanting to understand how to get something better from that loan. So there's a number of different ways that the banks look at someone that runs their own business. And there's a number of different ways that they look at your income as well. So it's really important to speak with a mortgage broker to understand the full way that it can be assessed. So if we looked at different ways that the banks can assess your income, one way is obviously using your tax return or your financials. And given the time of year, this will be released at the very start of July. So given the time of year, it's really important to sit down with your accountant to understand the income that is going to be assessed with the ATO, because that is the income that will be used for the bank as part of your application. So now let's go into it. One way, which is a really crafty way of doing self-employed income, is through director wages or director salary. So if you run your own business and you pay yourself a salary, then a bank like Bankwest or NAB can actually use that salary as part of the application. Therefore, we do not need any financials, any tax returns, no BAS. It's literally just those salary or those two pay slips that you've got. Now, it's important to note that your year to date, so the income you've paid yourself for the year, has to marry up to those pay slips. But that's a really easy way of getting your finance approved. Another way is actually with Westpac or the St. George Westpac Group. And this is where you'll use your notice of assessment, and you need 2 years of notice of assessments. And the bank will average that income and use that as part of your borrowing capacity. The notice of assessment is the document that you get once the ATO has received and applied your tax return and then issued the notice of assessment. No tax returns, no financials, just two documents, which are your notice of assessment. Another way of doing this is getting the bank or giving the bank your financials and tax returns, which is pretty obvious, but not all banks look at it the same. And so some will take your most recent year's tax return and financials, and they'll just use that income in isolation, whereas others will average out the 2 years. So when you're trying to get a home loan as a business owner, it's really important that you can look at all the different ways that the bank can assess your income. One other important thing to note is some banks will include the company debt that's within the business, car loans, credit cards, leases, anything like that. Whereas other banks like Macquarie or AMP, where they'll actually exclude the debt that you have within your company. Because if you are self-employed and you have a debt within your company, it's really hard sometimes if that debt is being applied as part of your personal borrowing calculations. Another point to note is when you're doing this, it doesn't always need to be a submitted tax return to the ATO before you actually apply for your income or for your loan application. Because what we might want to be doing is assessing your borrowing capacity based on what you think your financials will be. We can then do the borrowing numbers on that, and then you can go to your accountant and say, this is the income that we need for the loan that we want to apply for. So there's so much preparation that can go into this. And the last thing I want is someone to go ahead and just submit an application to a bank if you run your own business without looking at all the different ways that your income can be applied. So once again, if you are self-employed, you run your own business, you might think that it's harder for you to get a home loan, and it's not necessarily the case. So please reach out to a mortgage broker, reach out to your accountant, get the 3 people in a room or on an email or on a Zoom together, and then you can work out the best strategy for you to get the home loan you need to either buy your first home, your second home, an investment property, or whatever it might be. We have actually spoken to a number of really experienced accountants on this podcast. Drew Ratty and Ryan Brown, both are exceptional accountants, and their details and the links to those episodes are in the show notes. That's all for today. Cannot wait to see you again next week.